Hi, my name is Alex Carlucci with Gustin Cho Associates at Loan Cabin. Here to talk to you about a new change in FHA that came out effective March 18th, 2019. Scores below 640 are going to be much more stringent on the Automated Underwriting System. That's called AUS. That's a computer that approves all FHA loans across the nation with any bank you go to. So they're going to tighten it up, and you're not going to get those approvals at really high DTIs anymore. You're going to have a lot of lenders telling you that you're denied, or you have to buy something for a lot less than you were planning on affording. So what I want you to do is not be discouraged, because there's another option if you get a refer eligible, which you're going to get a lot more of now because of this. Refer eligible means you're downgraded to a manual underwrite. So instead of your lender saying, hey, I can get you approved at like a 35 debt to income ratio on the computer, you come to us and we'll do a manual underwrite. We can get you approved up to a 50% debt to income ratio on a manual underwrite. So I'm going to refresh you guys on manual underwriting, because I think that's going to be the new wave for under 640 credit scores. So manual underwrite has 3 tiers. They got 31 over 43 debt to income ratio, they got 37 over 47, and they got 40 over 50. The first ratio is your housing expense divided by your gross monthly income, and the second ratio is your mortgage expense plus all your debts divided by your gross monthly income. So if you want to go 31 over 43, which is still probably higher than the AUS will approve you at, so if you want to go 31 over 43, there's no compensating factors required. Compensating factors are one of 4 things, which I'm going to cover in a second. If you want to go 37 over 47, you only need 1 compensating factor. If you want to go 40 over 50, you're going to need 2 compensating factors. The list of the compensating factors, there's 4 of them. It goes as follows: 3 months bank statements, or 3 months reserves in your bank account after you close. That basically, they want 3 months mortgage payments sitting in your account after you close. That can be a 60% value of your 401k. So that if that meets 3 mortgage payments amount, that counts as reserves. Or let's say your mortgage payment's $2,000 a month. If you have $6 grand in your bank account after you close, that will suffice. You cannot get reserves gifted to you by a family member, but you can get closing costs gifted to you, and you can get the down payment gifted to you. So if you have 3 months reserves in your bank now, I recommend you get a gift. If all you have is 3 months reserves in your bank account now, I recommend you get a gift for your down payment and your closing cost. Another compensating factor is residual income test. Residual income test is something you have to call me, or have to go over about to see if you pass it. Basically, the smaller your family and the more money you make, the more likely you are going to pass that residual income test. It's basically how much money you have left over after you pay all your bills. And they got a calculation for it, and they really don't hit you really hard for your electric and your cell phone. It's a small number, so they're very forgiving, but they want to make sure you have money left over after you pay all your other bills besides your mortgage and your car payments. They want to know like your ComEd bill, or like stuff like that. So you have to call me and I'll calculate that for you. The third test you have to pass is a payment shock. So if you're currently renting for $1,500 a month and your new mortgage payment is $1,520, that means you have no payment shock. Therefore, you are eligible to count that as a compensating factor. Or if the payment's even less than your current rent, you're good. So that would be, you pass that compensating factor. Now remember, I was telling you need none for 31 over 43, only 1 of these for 37 over 47, and you need 2 to go 40 over 50. So if you have no payment shock and you have 3 months reserves, you pass the manual underwrite test. And number 4 is if you have additional income. This is the 4th compensating factor pass for a manual underwrite. So additional income would be something like you have overtime that you've been receiving for the last 12 months. We can't use that on your regular income because you need 2 years of overtime to count. So if you've only had 1 year of overtime, it shows that you have additional income coming in, and that would make you pass the 4th test by saying, I have additional income that you're not using towards my ratios. So you have another pass of a test. Another thing maybe is you're going to get bonuses going forward in a new contract you got from an employer, but you haven't gotten one yet. That would be additional income. Or there's other things. Maybe your child support just started, but it hasn't been 6 months. Proof of showing you've been paid on time. That would be some additional income coming for you. Or there's a bunch of different types of additional income we can use. So you want to pass 2 of those 4 to go to the max 40 over 50. And one of the other things you need about manual underwrite is if you have good credit but you're 620 and you're getting referral eligible, but let's say you weren't late on anything in the last 24 months on your credit report, that's a slam dunk manual underwrite. But you want to be clean for the last 12 months, and you want to have no mortgage lates or no car lates that were 2 times 60 in the last 24 months, and then you should pass the manual underwrite test. But call us, we'll go over with you. There's going to be a lot of denials going forward here with this more stringent test from AUS, Automated Underwriting System. So manual underwrites are going to be the way of the future for low credit score people. Give us a call. We know how to solve this for you. And if you like this video, please like below. If you got any comments or questions, please leave them below. We'll get back to you. Thank you very much.